Thanks everyone for being here early morning. This is a very exciting panel and a very exciting discussion that we have lined up today. I'll give you a quick intro about myself. I am Vish. I lead partnerships and community for Blockchain Valley Ventures Switzerland. We're an early stage investor in the blockchain space as well as AI, ML, and cybersecurity spaces. And we've recently been investing in the future of finance space across Europe and Asia as well. I'd like to give you quick intros about my panel members right here. So we have AMIE. She looks after the business development at Yuzu, and she manages relations with a network of Web3 investors and also helps with fundraising for Web3 projects. A fun fact about her that she can eat Thai food every day for the rest of her life, but only if it's not spicy. Then we have AJEET. He's the founder of Reflexical. He helps guide aspiring Web3 startups to success. And he has personally invested in 330 plus startups and dozens of crypto projects. And a fun fact about him is that he has a Guinness World Record to his name, which he won't tell anyone what it is. And then we have Sam. Sam is the lead managing director at Krungsri Finnovate. That's the VC arm of AJEET Bank. And I don't have a fun fact about him yet, but hopefully we'll find out something together soon. So yeah, let's talk about the topics at hand. My first question is, AMIE, are Web2 investors ready for a Web3 market, to invest in the Web3 market? What do you think about this?
I think for Web3 investors, they are curious, definitely in observation phase. And just like looking at any projects, the fundamentals and the usual business model will be really important. So they're definitely figuring out and asking questions to where I work with them. So they will be finding out, oh, what does it even mean? What is the economy and tokenomics? How does it actually work within this blockchain scene? And does technology play a part in, the fall, or even looking at for the founders, they will be able to look at the team, they'll be able to do so by themselves, but in terms of the technology and the finance and the economy, they'll be having a lot of questions. But yeah, overall, they're curious, and of course, it depends on the profile of the Web2 investors. So the conservative ones may be a bit slower to move, but yeah, it's always about risk management. Yep.
Great. Ajit, Sam, what are your thoughts on Web2 investors getting into Web3?
So roughly, 15 years ago, people who would otherwise invest in the stock market started taking a lot of interest in investing in startups, right? And when they came from the stock market background, they had certain rules they had in mind, fundamentally around profit and tenure and last 3 years balance sheets, etc. And startups did not fit into that framework. So they would look at everything such as, like an Amazon or even relatively famous ones and say that this is all nonsense. Someday they might evolve into something. 15 years later, it is now these startup investors who are looking at a Web3 startup and again facing the same identity crisis. Because number one, the Web2 investors, as you are labeling them, are more in number as well as bigger in size. The Web3 guys are fewer in number and they speak their own language. So if I am a Web2 investor, and there are so many of them, am I here to teach the Web3 guys or am I here to learn from them? While I understand as an investor, you are here to invest. But the fact is, what I notice is that when the largest multi-$100 million funds or a few billion-dollar funds are interacting with new Web3 startups as opposed to established Web3 startups, there is a general tendency to, for the Web3 guys to toe the line of the Web2 guys because that's where all the money is. However, as we saw with public market investors getting into private markets, where eventually a new balance or equilibrium was reached, I think that equilibrium did not get reached in the bull market that got over, and Web2 investors are very interested in this magic space called Web3. They don't fully get it, but that's okay, because the Web3 guys also don't fully get it. They only get what happened in the last bull market.
Great, that's a very interesting analogy. Sam?
Okay, so since you don't have my bio, so let me introduce myself. So my name is Sam. So I'm managing director of the Krungsri Finnovate, which is the corporate venture capital arm of the Krungsri Bank. So if you pass here, our big branch is over there. So on the top, we call Yellow Bank. So I'm from the Yellow Bank. We are under the Mitsubishi Financial Group from Japan. So definitely, MUFG is keen in investing in startups, especially right now in the Web3 blockchain startup. So right now I'm managing the fund about $200 million US. Recently we invested in 19 startups, 2 unicorns, but one of them is Grab, they're already a unicorn. The other one is Flash Explace. They were the first Thai unicorn. And in our portfolio, we do already have 3 Web3 startups, so including from basically on the fintech side one. Talking about on the Web3, I think we definitely believe in Web3 and blockchain. So we always think that we are the bank, and then we move from the what we call traditional bank in the old days. And now I think we can call ourselves as likely to be a digital bank already, because of most of the 50% of the product and services right now come from on the digital channels. However, so right now I think we have been clearly in a good direction that in a 3 to 5 years time, we need to move from digital banking to be a blockchain-based banking. So it started from this year that we, as the corporate venture capitals, need to invest and study and exploring about the Web3 projects. So we cannot be start the project into the bank yet, because it's still very early stage. But yet, at least we could invest and explore to see the opportunity in the futures that would be helping on the banking industry, that any Web3 and blockchain could be supporting to the bank in the futures.
Okay, great, thank you. I think that's a very interesting take. Even legacy businesses such as banks, investment banks, they're all going towards the technology, so they're not deterred by these manipulations in the market, the trends of the market. So that's a very interesting take. Amy, what do you think are some of the biggest or most interesting trends that you've been seeing in Web3 in 2022?
I think projects are getting more sophisticated. So I was in the scene since 2017, and there is a lot of evolution. So for example, for GameFi companies, the Web2 GameFi companies or gaming companies, they actually are moving, when they move into Web3, they have a base of the community and they really know how to gamify the gamification of the game. They know how to retain the attention, and they know that what players actually want. So I guess the next trend in terms of what I noticed for this Web3 is that there will be more projects that allow more of the blockchain to be truly utilized. So I would classify that most of the assets as non-fungible assets. So those are the things that will be more in demand. So the fungible assets would be more towards like stable coins, cryptocurrency, and that's what we can't control because I think the regulators are looking into it. We'll leave it to that. But the non-fungible assets are something that is really interesting because that will be purely based on demand and necessity, like for example, jobs for the people. So that trend would be, I would think that would make sense to stay, just like even for Web2, for businesses, it will be important that it's actually a true market fit. So as with all the trends and investments, I think moving forward, there will be more logic-based rather than hyped up or looking at specific people for a certain following. Fundamentals and what we really think that the fundamentals are truly what makes the business model sustainable. Yeah.
Great, great. That's a very insightful analogy because I was speaking to a gaming company from Vietnam yesterday, and their whole business model is basically getting people paid to play games on their platform. And there's a lot of gaming and entertainment startups coming out, especially from Southeast Asia right now. They are strong, strong projects, very strong founding teams. So I completely agree with you on that. What about you, Ajit? What do you think?
So it's very interesting that people who are outside of this ecosystem, many of whom may not be present in this room today, when they evaluate us and see where the trends are or what's happening, their perspective tends to be a little different because they will look at some of the inconsistencies or irrationalities and eccentricities of this space and point out, aha, see, this doesn't make sense. And there's a lot about Web3 that doesn't make sense. What is so amazing, and this is in response to your question about trends, is that while a lot of it has in the past not made sense, we have been learning very rapidly. For instance, take a break what you just said about a pay-to-play game, the example that you gave. Now the P2E, which is play-to-earn game phenomenon, where people would play a game and earn money, and in some third world countries, they were earning enough money which would be comparable to what they would have made if they were employed. So they're sitting at, like, I don't want to even name any project, and playing that, not enjoying. Note, they're playing, they're absolutely not enjoying, they're working at it, right? So I always said that classically, I thought that P2E games were play to enjoy, but now this has become play to earn. But that model came crashing down, as did several do something to earn. What I think is the big trend that I can see, the underlying trend is that today we are in Web3 like we were in online businesses in the late 90s. I'm not going to call it e-commerce because e-commerce made sense except for the super discounts. There was this huge thing called portals, and the only surviving ones are things like Yahoo, etc., which even today continue to be portals, but everybody and his aunt was making a portal. And then soon they realized it doesn't make any economic sense. So the fastest trend, whether it's in DeFi, whether it's in tokenizing of real-world assets in the form of NFTs, which you talked about, or what have you, I think the fastest thing I'm seeing is that in a span of just 2 years, we have gone from completely nonsensical business models to somewhat sensible business models. And I wish that they were perfectly sensible, but to manage this transition in a 2-year period, it is the fastest we've ever seen. Like e-commerce took a decade, right? So I think that the biggest trend is that genuine economics is now beginning to creep into various business models, and that is why the next bull market will be very different from the previous.
Got it. I completely agree with your point about games. Like, it should be enjoyable. It's not play to earn. It's not a job, right? So that's what we've been seeing in the gaming industry as well. We've been investing in a lot of gaming projects, and only the games that can actually deliver engagement while the earning factor is a secondary factor for the game, only those are the projects that are surviving. Sam, what are your thoughts about some interesting trends from this year?
Okay, so let me, since I'm from the financial industry, so I think the trend, if we talk about the last year, maybe a couple of years ago, we were talking about how the crypto could be a means of payment. I think in Thailand it's very buzzy word that most of the coins would like to get into the merchants to be the acceptance of the coins. And however, since I think in the beginning of the year, the regulation from the central banks and the SEC has been announced that no crypto cannot be any means of payments in Thailand. So I think similar into many countries in the region. So however, the Web3 on this kind of the means of payments has been changing to what we call the CBDC, or central bank digital coins. So in Thailand, it's already launched and already announced, and as well as the Krungsri has been awarded to be a pilot bank by beginning of next year. I think this is going to be a starting point to use on the retail CBDC in Thailand. So by the beginning of next year, I think that there will be starting the project from the retail CBDC one. I think we as a Krungsri, we got the award from the central bank to launch the project, co-project with the central bank to launch the what we call student e-wallet. So basically, if parents give like 100 baht to kids to go to school, normally they don't know that this 100 baht would kids pay. Maybe they pay for games, they give money to friends, or they lend the money. So basically, if this 100 baht, they know exactly which merchant their kids are using. So they will be very starting on the project by the beginning of next year. So this is, will be the starting point to use the CBDC into the country. I think this is similar to what the Yuan Digital are doing in China. And we were talking about in the future that how can it be converted between each retail CBDC from each country. So that would be answering what we call cross-border remittance. So how can it make faster than what we are doing today? Even though we have some of the blockchain companies that are doing this one. But with the retail, the CBDC, with governed by the central bank, must be easier. So I think this is going to be trend in this region for 2023. The other one, I think I would support both of you, Emil and Rajit, that the GameFi is coming right now because of the what we have seen the trend. Even though our mother bank, the Mitsubishi Financial Group, also has invested in Animoca in Japan. So they are doing the 50% on the joint venture to launch on the GameFi and the metaverse one. So we believe from our bank itself, we believe the GameFi would be one of the tools to attract the new generation of customers who will become the bank's clients in the future. So that's why we are starting to looking into the GameFi now, as well as the metaverse one. So we know that a lot of marketing agencies now are seeing that where they should be advertised in 5 years' time. So everyone says that metaverse is the right one, but this is in the exploration stage. Whether ourselves can be put our body into the metaverse yet, how it's smooth, how it be effective to use in the metaverse. So that would be trend, even for the financial industry, also looking into the GameFi and the metaverse one.
It's really amazing to see how banks in Southeast Asia have so much forward-looking approach when it comes to adopting new technologies such as blockchain and Web3 and even decentralization to some extent. We see this with Swiss banks. They're not as flexible and not as welcoming to new technologies. So that's a very brilliant take from you about banks. Ajeet, my next question is for you. What are your thoughts about the next bull market? How would you say would that be different from the current, from the last bull market? And what changes will we see in the Web3 world?
So just a little context. I entered into stock market investing coincidentally at the age of 12 and a half. And almost nobody does that. The reason I did that was my dad had really poor eyesight. So he would depend on me for everything, right from reading the prospectuses to making the phone calls, etc. So of course it was his money. So I got into that, and I was born and brought up in India. So I have seen all the bulls and bear markets in India because the markets really started in the late 70s or early 80s. So having started in 1982, I saw all of them. Here is something interesting about bull and bear markets in the stock market. And then I'll tell you about how Web3 is completely the opposite. Once the bull market comes again, it is the same headline stocks that are in the news. It is the same companies which are being talked about and see their graphs spiking. There could be some new entrants, but largely all bull markets look like the previous bull markets. In crypto, however, we are now in bear market number 4. So bull market number 1 was Bitcoin only, because really there was no other coin. Then there comes a bear market. There's an 85% crash in the price of Bitcoin. It goes down from 100 and something to 100 and something. As in really, it was not that much. Then comes Ethereum, etc. We have the next bull market has Bitcoin, and now there are these strange new animals. There's this new thing called Ethereum, and several more that don't exist today, right? Then comes bear market 2. Once again, interestingly and coincidentally, pulls down Bitcoin prices from $1,200 odd by a discount of 85%. Right? So first time it was 85% pullback on Bitcoin, second time also. Then comes bull market number 3. Now we are reaching a point where several of you might have been in the market. So this was late 16 and 2017. So this is bull market number 3. And while I always hesitate to use French when speaking to such a good audience, 80 to 90% of who is not looking at their phone, which is one of the best ratios I've seen. But that bull market, which was the previous one, was what I call the shitcoin bull market. Forgive my English. The point was that people were raising money, creating coins for the sole purpose of raising money. Then came the 4th bull market, which is now over, which was what, actually the previous one was probably scam coin. This one was shitcoin, which means lots of people coming up with projects which don't follow fundamental economics, or they are undifferentiated. Like today, if I start something which is like Amazon.com or Uber.com or Uber the app, and I say, I'm going to do exactly what those guys did, nobody's going to take me that seriously. Not that it cannot be done, but largely that is not the best model. You try to distinguish yourself and not commoditize. The next bull market is going to be completely different. And just so that you can understand what I'm talking about, just 4 bull markets so far. If you look at the players who were the winners in each bull market, barring Bitcoin, which has been in all 4, and Ethereum, which has been in 3, there is no further examples. Like look at the bull market that just ended. And there are all of these Cardanas and the Solanos and the Solanas and the Polygons and a few others. Were they there in the bull market prior to that? No. Even if they existed, nobody had heard of them. So every bull market is bringing a completely new set of players, and I think that has not ended. I think bull market number 5, which it is anybody's guess, so let's just call it Q1 2025. Sorry if I'm disappointing somebody, seeming too optimistic or too pessimistic based on your personal prejudices. But when that bull market comes, sure, we'll still have Bitcoin and Ethereum and a few others, but really the winners of that bull market are different. So for many of us who regret the fact that we did not buy the $1 Bitcoin or the $100 Ethereum, the opportunities are just getting started, because the bull market winners of the next one most likely have not taken birth yet or barely taken birth yet. And this is how it's going to be different. A lot of that is going to be driven by Web 2-like technologies, a lot of metaverse, which we all know is great, as you rightly said, but we don't know how to play that game. Well, it will be played in the next bull market.
Great, that's very insightful. Thanks a lot, Ajit. My next question would be for Amy and Sam. What is your take on the evolution of the digital landscape when it comes to Web3? What are some things that you hadn't seen in the past you saw lately, and what things that you think can shape the future of Web3 in the future? Sam, let's start with you.
Yeah, so when you ask about the evolution of the Web3, I think we are in the stage of when we say, when we are the customer that adopt to any Web3 startup, it's become very advanced one already. So however, unless customers adoption sometimes on some of the Web3, for example, some of the metaverse have been launched in Thailand and in the region, and just less people are using it. Because maybe the technology doesn't, can be easily adapt, even the hardware things. However, so we are interested in the technologies that are hybrid one. The reason is that we have been invested in one startup called ADDX, ADDX, formerly named iStock in Singapore. So basically, they are doing the tokenization of the closed-end fund. So basically, if you are the investor of the closed-end fund, you have to wait for 10 years in order to redeem all the investment out. But however, with this tokenization one, you can tokenize even on the year 3 or year 4. You can tokenize and sell, and tokenize to be the digital asset, and selling into the customers easily. So this is how, what we call hybrid between the old fintech and the new fintech. And that it help those who are in the baby boomer, who are lovely to invest in mutual fund, understand this product easily. And it helps also on the new generation one to get into investment into the very new products on the tokenized one. So this is what are we fighting for the Web3 project, that we easily, to help easily for customer to adopt the product within this 1 or 2 years time. Because most of the product, if you see that it can be using maybe 3 to 5 years with the advanced technologies are using. So the evolution right now, I think we are back a bit. So 2 years ago, everything is very advanced. Even though we invested in the company called Forward, doing the derivative decentralized exchange. So normally derivative is already headache for us already. This become derivative decentralized exchange. And now it cannot be launched yet at the moment in the market because it's too advanced. But however, when it comes into the future and people get easily customer adopted, then I think we can launch the product effectively on this one.
I think that's very important to have an eye for what's going to be big in the future. And if you pick the right ones, you are always going to succeed, especially in Web3.
Correct.
Amy, what are your thoughts about this evolution that's going on in Web3, especially because you invest in startups globally? So just an add-on to the question, what's the kind of difference you're seeing in startups in Southeast Asia and comparing them to a startup, say, in US or Europe?
Startups in Europe. First off, the general evolution would be, as with all the primary sectors and primary market, you're pumping liquidity into the market, and then the secondary market comes in, whereby it can create more opportunity to make money with volatility in the secondary market, like options trading for the evolution, just like a traditional, TradeFi. So I would think that for this evolution, once the market is stable in terms of the primary market, the secondary market will come in general. So where else for US, and the difference between Southeast Asian projects is that for US, the ecosystem is pretty strong, and the relationships between each of the projects are interconnected with each other. So with this, the chances are they are able to support each other more, which I think Southeast Asian projects are getting there. But I think for example, with events like this to mingle, get the projects to talk to each other is really important. The culture of sharing is important. Lower barrier is important. So hence, that's why my company, Yuzu Venture Partner, is trying to make deal flow easy. So we work with everybody. Yeah, so I think that the interesting part about Southeast Asian projects are because it's pretty much localized, and the culture is vastly different. So let's say if we were to invest in GameFi companies in Southeast Asia, in Europe or in US, we will look at different kind of gameplay dependent on the culture itself. So, well, for Southeast Asian, it's pretty much diverse. So the investors will be vastly different. For US, will be more unified. Hence, you will share investors with different projects. Usually one project investor lead to the other. So that's what I see in the trend. But for the evolution-wise, again, in general, I would think the secondary market products and projects will come in future. And of course, very importantly, what everybody's concerned about at the moment in the mid-term of the evolution would be the off-ramp solution. I have crypto, how am I going to convert to fiat? And now the solution is still difficult, and I agree with a hybrid solution whereby near future, there will be a certain way for people to have more control with their wallets, but at the same time, have off-ramp solutions that they won't be able to be afraid that this centralized area will be holding on and freeze their accounts.
Great, thanks. That's another thing that we've been seeing as investors, this emergence of hybrid finance as well, like with the convergence of CeFi and DeFi. So that's a very interesting insight, Amy. Ajit, what are your thoughts on the evolution that you've been seeing in the Web3 space? Anything that that has particularly stood out for you in the past?
So, you talked about some form of hybridization, and now so did you. Here's the thing.
I love your stories, by the way.
I'm not a huge fan because I see that as a stepping stone. Sure, from where we are and where we want to go, this is an inevitable intermediate step. But in reality, that is not our goal or our destination. Let's take an example of fungible assets versus non-fungible assets. I hope it is not a surprise to people in this audience to know that in the world, I don't like to call it the real world because that implies there is another kind of unreal world. So I think the digital as well as physical world are both real worlds in their own way. So in the world, more than 99% of assets are non-fungible, right? So the moment financialization or tokenization occurs, naturally the market of non-fungible financialized products or tokenized products is going to be larger, which means non-fungible tokens as a market are going to be more than 99% of all tokens. As in, that is an inevitability, right? Now, but you come back to today or last couple of years, really NFTs were like, like monkey pictures and some just artwork, etc., as opposed to, as a lot of people, of course, did put in a lot of utility. And by the way, I'm a fan of NFTs, okay? So let me not deride something that I otherwise believe in. But the way it has come about is that the digital dimension is obnoxiously overgrown compared to the physical dimension. And you suddenly are not going to change that. Like, for example, when I look at some of these projects that were listed on the screen before I came here, there was one called ShipFinex. Anybody from ShipFinex in this audience right now? Hey, nice meeting you. So what they are doing is they are actually tokenizing ships, right? I think that a lot of that is a huge trend that we are going to see. But this is why some of this logic is flimsy. For instance, a lot of people say that payment systems based on crypto speed up payment processes. Why is that? Like when a bank does a SWIFT transfer, wire transfer, bank transfer, whatever, the electrons in the wires travel at exactly the speed of light, right? So when you click, money does go from ledger 1 to ledger 2. It is the regulatory overhead, cooling periods, reconciliations, audits, etc. that cause the delay. The transfer takes no time than a split second, the same as with crypto. It is the absence of this regulatory overhead, audit overhead, etc. that causes crypto to be faster. If bank A sends wire transfer to bank B today by the traditional method and it takes 24 to 72 hours for the money to be credited, tomorrow if bank A sends Bitcoin or stable coin to bank B and uses the same mechanisms, it's going to take 24 to 72 hours, right? So what I want to point out is that we are at a very crazy, awkward, 13, 14-year-old teenager level in the Web3 business. On the one hand, we have started thinking of ourselves as grown-ups because I'm 13 years old today. I'm 14 years old, so my parents can't tell me anything. Parents being the regulators, governments, etc. At the same time, we really aren't. We are still kids, right? So I think that that is the awkward phase we are in. Hence, this hybridization makes sense because you're simultaneously a kid and an adult. But soon you will grow up and it won't be hybrid anymore.
Great, that's a very interesting insight. Thanks a lot, Ajit. My next question is for the investor inside of you, both as an institutional part of an institutional investor and as a personal investor. Where do you see the capital flowing to? What are the sectors that are standing out to you, the kind of startups that are coming out? Amy, let's start with you.
Currently, as of this year, C5 was leading, right? And then followed by the blockchain infrastructure and the Web3 and NFT. DeFi being the last because the ticket size is much smaller for retail investors and VCs. So I would think there will be a shift. Infrastructure is still really important. So it be continued, maybe on par with a better infrastructure, on par with Web3 and NFT projects, which are the non-fungible asset projects. So I think the shift will be towards that in general. Yeah, I think that with this is enough for the growth rate to be much higher for the funds to investment to keep coming in for those areas. I don't think, I think that as long as it's something to do with making the primary market stable, there will be even more influx of the Web2 investors that will be coming in the safe way. Yeah.
Okay, great. Sam, how do you feel about this? What spaces excite you in terms of investment opportunities, say, for the next 6 to 18-month period?
Okay, since as I mentioned that I think most the major banks in the regions are moving from digital banking to blockchain-based banking. So in terms of blockchain-based banking, I think we derive into two types. Related to investment and as well as a infrastructure one. So basically, the reason that banks would like to move to blockchain-based banking, I think there are two reasons. The first one is that we would like to offer the new products to customers in the future. Okay. Thank you. Okay, so I think we would like to move into the futures on the new product. For example, like the hybrid one that I mentioned, or maybe the derivative, decentralized exchange. The other ones that we haven't started, but we are looking, that Amy mentioned that this is the blockchain infrastructure that's supporting the banking industry. Maybe custodians, or maybe some layer 1 or layer 2, maybe cross-bridge. So this is what the banks are looking into the future. The reasons why, because we would like to increase the productivity for the banks. We believe and we trust the blockchain technology will be helping a lot. I always use this example in the bank that how can we do the same as like compounded finance. So compounded financing, the decentralized finance. And basically, they have the asset size during the peak time, similar to Krungsri Bank. But they already have 50 staff, 50, whereas Krungsri has 20,000 staff. So when we see the lending protocol, lending process, I think just only one loan, we use about 100 people in just only one loan. But compound, no people are interfering into the system. But how can we do this in the future? We might not going to be reduced to 50, but at least on the process, if we use the blockchain technologies, how can we minimize the staff intervene the process and use the blockchain technology replacing them. So this is what are we seeing in the future, that how can the blockchain can be helping in this much. I know it's not cannot compare with a digital asset where you can pledge and then you can lend it automatically. But in the real life, in the real financial world, I think the technology, some part can be replacing.
Yes, sure. You're next, Ajit, please.
So here's something interesting, and this is actionable information, not just conceptual information for those of you who want to invest in this sector. It is very important to understand that when you take a view such as will DeFi grow, CeFi grow, exchanges grow, metaverse grow, that doesn't mean anything because you can't invest in metaverse. You can invest in a specific metaverse project. So just knowing that metaverse will do well will not be enough. Let me give you an example. Going back to the late 90s or early 2000s, was e-commerce a good investment? The fact is, the e-commerce industry grew 1,000-fold between 2005 and 2015, or I should say 2003 and 2013. The industry grew 1,000 times. But most players in that industry died in the same period. That means had you invested in dozens of them, most of them would have gone to zero, despite the fact that the industry grew. Likewise, when it comes to payment systems, social media, mobile games, each of these has had a decade where the industry grew 1,000 times in a decade, right? But in that same decade, most players in that industry died. So if you were doing an industry analysis, sure, DeFi, CeFi, hybridization, tokenization, metaverse are all have that potential of 1,000x. But at the same time, most players are going to die. For example, have you heard of an airline industry or a restaurant industry or a construction industry grow 1,000x in 10 years? No way, it's not possible. There are physical restrictions to that. So purely digital businesses have that potential. For example, look at search engines. Right? Before Google became Google, there were so many other search engines growing very rapidly, they don't exist today. So it's very important to not just take a view on the sector. Being totally digital, there's a tendency of a winner-take-all. It's not truly winner-take-all, but there's a tendency of a winner-take-all. For example, when you're going to do a metaverse play, please realize you're fighting with Meta, which means what was earlier called Facebook. So will the metaverses survive in the face of a Meta? Some might, most will die. What I'm getting to is that sure, take a view on the industry, but that is 10% of the problem solved. The remaining 90% is about this specific project. How do you choose that? I'm going to give you just a simple solution that I use. In reality, given the flux that we are seeing, given the sort of uncertainties, regulatory as well as otherwise, I think it is all down to the entrepreneur. And that is why I'm so excited to be here amongst so many entrepreneurs in this audience today. It is not the sector. Almost everything in blockchain is going to grow. Almost everything, some more than the others, but it's having the good founder that makes all the difference. Thank you.
Great, that's a very insightful answer, Ajit. We're approaching towards the end of the panel, but one last question. So what should the founders have in mind when it comes to raising capital, especially in the Web3 space, from an investor's perspective? How do you think they should go about it? How do you think they should approach an investor with their project, with their idea? AMIE, let's start with you. How do you think they should go about it?
As with any business model, validate it, get as many partners as possible. That's relevant. Form a really strong bond with your ecosystem. So that's the start of your validation. And then when you do fundraise, I think with Web3 fundraising, it's a little bit easier than Web2. But of course, investors are a bit more defensive at the moment. So buy time, build up your project, and then when you present, make sure that all the factors are there as with any business model.
Great, thanks. Sam, what do you think? What do you look for in founders and their projects when you're investing in them?
I think the same, even the Web2 and Web3, for me, just one part is the same. I think it's the passion. I think every founder has passion. But basically, the founder has to know what the pain points exactly is. And most of the Web2 is easily because most of the pain points come from the traditional industry. But with the Web3, it's hardly to find because everything is new. But if the founder has experience and understand on these products well, and if they could have an experience prior starting the startup, then it would be some the competitive advantage that we could, even though we are the investor, could be easily investing into those startups. The second part, same as Emil, that Web3 may be easily to find the fundraising than Web2. But we, right now, it's hardly to see the founder raise from the ICO on the day one. If you are not, even now, I think we believe that it has to be, we have to see some product first before raising the fund. So I think slightly raising the fund rather than jumping into like $50 million in the first day without the product showing to the investor. I don't think it's going to be exit anymore on this one, unless you have you have already proven that you are the super founders or serial entrepreneur already. So I think I would suggest that if the entrepreneur or founder are starting the product first, even from the smaller scale, and understand their product easily, understand the product clearly, know what is a pain point, then or the investor will be supporting on the funding side.
Great. It all seems so basic, right? But at the end, it's the same mistakes that happen again and again. So that's a very interesting perspective. Ajit, what would you say a founder can do to be a part of that elite 330 plus startups that you've invested in?
So I think, this is the only answer that I'll give you where Web3 is absolutely no difference from any other previous version, because when you're talking of this person called the founder, it is the same old thing. Number one, the orientation has to be to grow the business, not to fundraise. When I find that all the entrepreneur is doing is focusing on fundraise, I just run away from there, regardless of anything else. Number two, the orientation has to be towards finding creative, hustle-driven solutions as opposed to developing the ability to throw money at problems. And number three is that, it's like, it might be tough to define, but when you are sitting with an inspiring founder, and the way they go about articulating their passion, having passion, everybody does, I think that makes all the difference. So I typically would not invest by looking at many pitch decks, attending presentations, etc. I've got to have 1:1 with the founder. And if the amount of money involved is serious by my standards, then it has to be multiple 1:1s.
Completely agree. The founding team is the core of any capital raise. So we are running out of time. I'd like to open the floor to the audience for any questions that they might have for our panelists. And yeah, please go for it. Can we have a mic there, please?
Yes, they're recording it, so that's the only reason to use a mic. I should tell you, I used to be a lecturer at the University of Texas at Austin, once upon a time. So I would notice whenever I would ask my students that, hey, do you have any questions? It was usually the students seated in the front rows that were asking the questions, and that's exactly what has happened here. So my mind sped back 30 years. 30 years ago, I was a lecturer, and I'm like, nothing changes. But yeah, please.
So you had a lot of talking about GameFi and talking about the metaverse. And a lot of people think that that is what a big part of Web3 is. But we've had something like this in Second Life for 20 years, and it hit a plateau. And now we're talking about a platform that's three-dimensional instead of two-dimensional. Why would metaverse be more successful than the 2D space of Second Life?
Okay, I can take that. So I come across this because I was from the Web2 world, everybody is. So I was in the more towards 3D realm. And what happened was, yes, technology was there, augmented reality, immersive. Now there's an immersive technology as well. It's the same. But the point is that there wasn't any way to create an economy. So the big difference is that blockchain was introduced to be able to monetize it properly. You'll be able to track your IP, you'll be able to create a lot of the assets that actually will generate and push the economy forward. So that's a big difference In the past, there wasn't an opportunity. It was mainly for events, for marketing purposes. But now with fintech, it truly can create a huge economy in this realm.
Yeah, please, go ahead.
I had the benefit of having the mic here, so I thought I'll ask a question. So, Sam, my question was, since you all are focused in Thailand, is there a tendency to invest in ventures which are, Thai-based? And, do you all add value beyond just capital? Is there other forms in terms of value add that you all do?
Yeah, so I think in any Web 2 or Web 3, I think we not just only focus in Thailand, so we focus in the region, but not only the startup can be global startup. The reason is that Krungsri is not just only present in Thailand. We have the business consumer finance in Vietnam, Philippines, Indonesia, and Cambodia and Laos as well. So these are 5 countries where we are growing the business. Basically, so if any global startup who can synergy, so we look on the synergy investment. So if the synergies come with us into and could help in these 6 countries that we are operating, then we are looking into the startup, either Web 2 or Web 3. But however, if mostly when we talk about the Web 3 in Thailand, I think most of the industry are ready to be focusing or exploring. Apart from we are one of the heaviest trading country, crypto trading country. So basically, after not the trading, I think we are exploring into the metaverse or NFT that we are seeing on that part. Thank you.
Great. Do we have any other questions? We have time for 1 or 2 questions. So if there's anyone. Okay, great. I think we can end the panel here. Thanks a lot for listening, everyone. Hope this was an insightful session. And we are here for any questions that you might have or any one-to-ones. Thanks, everyone.